So yes, Armin, thank you. We have the enviable position of being just before lunch. So hopefully this will keep you guys focused for the next 20 minutes. But first of all, thank you for joining us. We've talked a lot about the direction of travel, the important steps that we need in terms of moving the market forward in digitalization. And I think that the digital bonds specifically have picked up in pace in terms of type of issuance, integration points, and number. And over the last 6 weeks, both of you have been involved in specific transactions which have really pushed the market forward. So in your introductions, I would like for you both to speak to these specific transactions to really bring it down to a use case implementation that's involved many people in this room and others outside of the room, and then we can take it from there.
Sure, I'll start. At SDX, we've been building in a step-by-step approach what we believe will be the future of capital markets on blockchain, and every step was important. So the last step that we've achieved, which was actually Friday, 1st of December, is the world first real wholesale CBDC settlement of primary issuance of bonds on our platform. So prior to that, it was proof of concepts and trying out with the Swiss National Bank, and this time around, on the 1st of December, we settled a primary issuance of 200 million total of Swiss franc of 2 canton bonds in wholesale CBDC with 6 banking partners in Switzerland. And that's an important step because one of the challenges that were highlighted in the actually initial speech, initial keynote, was about having a settlement risk-free payment assets for those transactions, and wholesale CBDC is clearly one of them. And it was, as I mentioned, the last step of an evolution of 2 years where we attempted and succeeded in really solving all the challenges that were highlighted this morning by the first speaker around making sure that liquidity is accessible. It is through interoperability, and we can discuss that a bit later. Making sure that we can settle with a risk-free settlement asset. It is with the wholesale CBDC. Making sure that we look beyond our tokenization islands in the sense of it's accessible only for SDX members, but not accessible for the rest of the market. That has been also addressed. So through that step-by-step journey, we now are in a position for bonds at SDX to say that we can really issue natively on blockchain bonds that can be traded, that can be settled, that can be asset serviced, apologies for the neologism here, and in the future that will be portable on other blockchains, be it private and public chain. That's our next objective.
Thank you very much, Alex, for that. So at Euroclear, we have taken a different approach, and we have built our platform, in a safe and gradual way. We're obviously a financial market infrastructure, and whatever we do it at scale that has massive impacts. And when we decided to accelerate on this digital journey, we had several things to take into consideration. Obviously, co-constructing with clients, and we are very lucky to have some pioneer issuers together with us, and the issuer community have helped us guide us through what would make sense as a first step. So we have decided to focus mainly on the primary market distribution and not go end-to-end, because the feedback we got from the investor community at the beginning was basically, we are happy to be smart followers. We are not willing to be disrupted for the time being, but do your stuff and we'll come. Whereas on the issuer side, we have been having much more traction, and we're able to build actually a real DLT solution, issuing a digital native node with on DLT, real DVP, atomic settlement, and we're lucky to have cash on chain because of our structure with Euroclear Bank. And we have built the platform in such a way that is fully API, of course, ready to connect to any kind of pre-issuance platform if that ever becomes the preference of the issuer community.
Sure. Just to give a bit of background, I believe most in the room would be familiar, but the transaction that Jorgen's mentioning, the digitally native note at the end of October, was the 3-year for the World Bank.
Exactly. Together with City and Toronto Dominion.
So one of the key themes that's emerged and changed, I think, as the previous panel commented, was this view around interoperability. And yourselves being in the market infrastructure side, I think have a very specific view of what it means to be interoperable. What are some of the progress points that you've made, and what are some of the obstacles in creating a universe that's more interoperable digitally?
Well, the first interoperability challenge when you start issuing digitally on a new infrastructure is the interoperability with the traditional infrastructure. So on the 6 group side, what we've done is, as soon as SDX was created, pretty much 2 years after, we established a bridge between, or link between, the native digital infrastructure and the traditional infrastructure to ensure that any natively issued bonds on blockchain could be also tradable and settlable in the traditional way, so T+2, on top of atomic on SDX. So that's important because obviously you want to have, issuers want their bonds to be accessible by any investors as they base as they have today, and that's possible this way. We also did the reverse, meaning that any assets on the traditional infrastructure can be tokenized, so it's not natively issued on blockchain, but it's tokenized on blockchain, and made available in services that we have and would be built, we would build in the future. That's important. And the last step, the ones that we're currently working on, is bridging tokenization islands, as I call them. So we have banks, some of them are in the room, having created their tokenization platform. They issue bonds that are stuck into their customer base in a way, and that cannot go beyond their customer base for obvious reasons, because a bank will not necessarily, well, HSBC is not going to necessarily want to use Citibank's tokenization platform and vice versa. So that's our natural role as an FMI. An FMI is a multi-party neutral infrastructure that connects market participants. So that's the role we want to play in the future. Yes, tokenizations will happen everywhere, not only at market infrastructure, and we want to continue being this multi-party settlement infrastructure that can bridge those islands and make access to liquidity easier. And that involves, by the way, also the same way we have CSD links today with between FMIs, it will also evolve connecting to Euroclear and Clearstream in the future. I'm 100% sure of that.
Yeah, and to build on what you said, from the beginning, the way we have conceived the platform, DFMI in Euroclear, is basically to make sure that everything that was issued on DLT was going to be accessible on the traditional system. To address a few points mentioned by Jocelyn this morning in his speech, because you don't have to compromise anything on the liquidity. You have the full secondary market, and it can be repoed and put in collateral within seconds. So it might not be as fancy and as a technological challenge, but we are not in this game for that. We are actually having real money being issued, flowing, and actually trying to bring all this ecosystem together to say, okay, it's issued digitally native node, it's accessible in a seamless way to the investor, and hoping that will motivate people to try to be more familiar with this kind of instrument. Because we have noticed that it takes some education as well and we want to accompany the market being this change agent and supporting this shift toward digital assets. And maybe just a last word, because we are convinced about the transformative nature of that DLT can bring. And to a point made previously, we are not only focusing on tech. I think we're motivated by the business problems and the opportunities this can bring. And we have been contributing together with DTCC and Clearstream on building a white paper that is called Advancing the Digital Asset Era Together. And we are looking to have a wider market engagement, and this will come quite soon next year. So when it comes to supporting the growth of the capital market and digital assets, we lower the barriers, we work together, and we try to progress together.
To pick up on one of the comments that you mentioned around bridging digital and traditional venues, both of the transactions that you mentioned are listed in both traditional and digital venues, and that's oftentimes a complaint that I hear from the investor community. If you've answered that in some way, what do you think are the barriers for broader investor distribution? Have you addressed those from your perspective? Or what would you ask of the investor community to really enhance distribution?
It's actually a great challenge, and back to Jenny White that made some comments earlier on that. I think that getting ready to be able to cope with digital assets as a mainstream security from all the investor community is going to be key. And it's quite interesting to see how it's treated by the market. You know, usually you have a World Bank bond out there, people will buy it within seconds. You make it digital, well, it triggers some more questions. And we are here just to help progress this way. So basically, I think we have some work to do in getting all the community ready, taking the feedback we have received as well, trying to change the way we operate, try to demonstrate more value, because I think it's clear, huh? It's not striking today, but definitely there's a direction of travel we are already embarking on.
Apologies. When do you think we'll move to a fully tokenized or fully digital world? What's the timeline in your minds as you look at it from a market infrastructure standpoint, which is quite a heavy lift?
My guess has changed this year, actually. So if you would have asked me that question about January 2023, I would have said 10 to 15 years. And because it's a very slow process, requires a lot of mindset change, education, operational change, being comfortable with the technology, bringing the nodes in-house at the banks to be able to directly connect their back office system to really leverage the technology and the benefits of the transparency of the technology. That takes a lot of time. At the end of the year, I'm a bit more optimistic, but I'm still into a 7 to 10 to 12 years type of horizon. And not because of the technology itself. I think the technology is pretty mature. There's still a little bit, quite a few unknowns in terms of how interoperability between various chains will work efficiently, whether public chain will become more prominent, but these things will be sorted out in the next 2 to 3 years, I would say. The more complex part is really the legacy tech, legacy operation, and everything that is legacy, really, and moving it from where it is today to this new paradigm, because it is a paradigm shift, clearly, on how things will be issued, will be traded, will be settled in the future.
Yeah, I would agree with you. I would maybe just slice it in 3 parts. You have the first part, third part that is, you know, getting ready, 3 to 5 years, getting more adoption, add another 3 to 5 years, and then start to scale and unlocking real value. So this is the kind of time horizon. You can shorten it, you can accelerate, depending on what scale you are looking at, but you have to go through all the phases. And my personal belief, I think we are almost at the end of the readiness phase.
Thank you. We've heard a bit around the discussion in technology around the role of AI, and that has become a very prevalent theme, particularly over the last 12 to 18 months. Given that we're thinking about things more in a tokenized digital blockchain lens, where do you see the role of AI? Is it a distraction? Is it a peer? Is it a tool?
It's a tool, like any piece of technology at the end of the day. We shouldn't be too focused on blockchain or AI or whatever. It is a tool that serves a specific need, if there is a need. And in that space, I could see quite a few interesting use cases in the subscription, for example, or buying of instruments. I've seen already demos of a tokenization platform who was demonstrating how, by just talking to a generative AI bot, you could end up with, after 2 or 3 questions, getting into your email a fully constructed contract to buy, to subscribe to a primary issuance of a specific instrument or a private share, for example. So in facilitating, I consider that AI will be the user interface of the future, whereby we won't go on multiple platforms to connect and buy things. We will talk to something that will connect to the right platforms to buy and sell what you need to, and taking the best, more efficient route to what you want in your head. So translating your needs into connections, settlement, trading, and in various technologies.
I'll try to answer it in a slightly different way. No doubt that I'm a big believer in the benefit it can bring. But I'm kind of surprised to see the fashion trends in capital markets. If you look back a few years ago, everything was ESG, which is a great thing. Then everything was DLT. And now everything is AI. You just have to look at the main, topics of the key conferences we're all attending. And so while it brings benefit, now I have to compete with budget for that. So hopefully we're still able to gain more traction. But I'm looking forward to the next topic that is going to come to compete with the AI budget that is allocated and voilà. But I think that to my point, whether it's ESG, DLT, AI, we are customer driven, trying to unlock value. And as Alex mentioned, in the core of the FMIs, in our DNA, we have the connectivity between issuers and investors and providing all the services around. So that's always a paramount focus.
Eyeing time, and we have another minute before we wrap and everyone can break for some food. What are your hopes or expectations for the 2024? Is there a goal post in mind, or is it continuing just along the path? Is there something that you would like to see out of the market or out of your institution specifically? What are you looking forward to next year?
Christmas? No? No, I think, we have embarked on a journey and there's no going back. So it's all about, acceleration. Definitely, I think that showcasing more connectivities between FMIs is going to be a key driver globally for the ecosystem. So if I had one wish, that would be it.
On my side, it would be finally seeing what blockchain is supposed to enable, which is global liquidity pool or global liquidity corridors that can where liquidity is accessible very easily from any markets in any markets. I think we will start seeing that happening next year, where not necessarily something accessible from everywhere very easily, but maybe some liquidity corridors established between two specific markets.
Okay, happy to take any questions if anyone has one for our two panelists. Otherwise, oh, here we are. Please.
One of the questions was with regards to how do you get the investor community comfortable, and the response was it's going to be difficult. And I think that is the biggest difficulty that we have in the investor community, is that if I was to buy a digital bond, I can't see through onto the platform. There's zero interoperability. So, for example, the big brokers have their own platforms. They put it onto the platform. I can't actually see it, and then they do a duplication on Ethereum, for example. And it's that lack of transparency that causes us in the legal space and the risk space big concerns. And until that is addressed, I think the investor community are going to really struggle with this.
I agree, and that's why we've been also focusing on ensuring that in terms of risk, for example, or in terms of quality of assets, whether it's demonstrate, and we have demonstrated, I think, that whether it's natively issued on blockchain or whether it's a traditional assets, same risks, same price as well, which is quite important. So no surcharge because it's a digital asset. And that has been a step-by-step approach, as I mentioned. So I think now we, at least in Switzerland, if you are connected to the Swiss market today via the 6 traditional exchange and or CSDs you have access to those instruments the same way you have access to any other bonds or any other equity that are available, that are there for trading and for settlement on the Swiss market. The next step is the cross-border part, the interconnectivity with the other markets. And even when we will go into, as I was mentioning, make those assets float on other blockchains, Ethereum, for example, the idea is to do it in a controlled way, meaning that as an FMI, I am responsible and liable on how the assets of the issuances are managed in a way. I cannot duplicate positions, I cannot create positions. And that's what we do on a day-to-day basis in a way. So through a licensed FMI, if those assets end up being floating on even public chain, you will have that certainty. Because if it's not the case, I personally go to prison because I'm a guarantor of the license that SDX has as an exchange and a CSD. So that will help for sure. It's the connection and the anchor into something that is regulated in a very traditional way.
I think that if you would try to buy the World Bank security that was issued today, you wouldn't feel the difference. If you don't know that it's written digital native node in front of it, you wouldn't feel the difference as an investor. So have a try, and happy to get your feedback afterwards, because it's seamless, it's very liquid, and you can do whatever you do with any kind of other assets today. That's the Euroclear way.
Okay, thank you, Alex and Jorgen, and thank you for your participation.